Good afternoon, everybody. Welcome to TraderMerlin show for what will be my Friday show. I know it's been all these really short weeks. Normally we do 5 shows a week. Now we're down to like 4, so this week's going to be 3. Sorry, everybody. So on that note, I'm raising a glass. Cheers to all of you. Hope you had a good day today. It was a good one for me. I really had only one active day trade, and it was great. I'll walk you through that one as well on something I don't normally trade either, which was kind of... it's always fun when you have something that you don't usually trade that turns out to be just a perfect setup. Things look great, boom, and you just knock it out of the park. So cheers to all of you there. As I take a sip of this one, I just realized something. You guys know I'm headed to Las Vegas tomorrow. It is the longest 6-day heat streak in the history of Las Vegas, and I'm going to Las Vegas. This should be fun. Hopefully I don't melt along the way. Should be a fun time up there, but... man, 115 degrees, 118 degrees, that's a little bit much. Let's hope the AC doesn't break, or I might be coming back much, much sooner. Okay, so let's start with, I've got a couple of Whistler questions to talk about, and we'll get through those, as well as just market observations. Much needed pullback I have on the screen here. We talked about just how it's been accelerating, and really, there's no reason to go short this market until you get a sign that there is a time to go short. And really, we're expecting there to be a pullback. Didn't expect it to happen today, but that's fine, because part of the rules that I go by is whatever the market gives you, particularly if you are looking at short-term day trading, you have to be flexible and go with whatever the markets give you. So, as you know, a couple days ago, XLY was the market that I was looking to short. I did buy directionally just a 1 put deep out of the money, which we'll see what happens with that one. But today I was watching it in the morning, and it spiked up, had a great little opening intro. Let me bring that one up for you guys, and then we'll talk about what drove these markets. So this is the NQ. Let's go to XLY. So there you have your XLY, and I basically said let's wait the opening 15 minutes to establish the range, which was easy. And I was just sitting there watching this one. I saw these low. I did not go long because I just felt like it was too extended. I was thinking we might have a pullback. And then as we came back down below this line, which is at 192.05, just started opening a few hundred shares short. And I was like, okay, fine, we'll go a few hundred shares short. Ended pulling out several bucks out of this one, which I was pretty happy with that. I did set a trailing stop in this kind of free fall here right around 8 o'clock this morning, and then it bounced back up. So took me out. All in all, a great trade just by a opening range breakout to the downside. Now, what caused all this? Well, I guess we can go and look at our graphic here, which talks about the much needed pullback. What was it? Some of you might be feeling this pain today because it was pretty sharp and it seemed to be somewhat counterintuitive, right? When you look at the economic data that came out today, which is the CPI numbers, I was anticipating CPI coming out higher than 3.1. The expectations were going from 3.3 to 3.1. I thought we were going to come out about 3.2, maybe even in line with 3.3. And lo and behold, what did we get? 3.0 for the year over year, and the month over month, you're talking a negative 0.1%, which is obviously very good for the markets because that means that inflation is more under control. So this question came in from Jim, which I will get to right now. He says, thoughts on the CPI numbers today? Why did the markets crash? Well, I think Big Eb's probably right. It's rotation, right? When you have a market that's just heavily stimulated at certain points, there is a rotation out of one market into another. Technology is clearly overextended. I mean, anybody look at those price charts of NVIDIA, Tesla, even some of the other Magnificent Sevens like Microsoft and Amazon and Google, they're pretty long in the tooth, and it was due for a pullback. And it seems like all that kind of happened at once today, and there's other factors to that. But let's look at some of the actual data. And again, this assumes that we believe and trust the data. This is a very challenging one for me because I don't necessarily believe or trust this data. But look what was going up and what was going down. At the top of your screen here, you can see auto insurance was just a monstrous increase in the cost of auto insurance. Now, I'm not exactly sure why auto insurance is going up so much. Maybe it's because they're spending so much money on advertising for those specific companies like Geico, Progressive, you name it, Allstate. They're all spending tons and tons of money. 19.5% increase year over year for auto insurance. Now, I don't know about you, but when I see something like this, it makes me want to look over at some of these insurance charts and maybe say, hey, what's going on with Progressive? What's going on with Allstate? What's going on with, Mutual Life or whatever insurance companies there are? So let's go look at PGR. Because this kind of tells me that their profits must be surging. If they are having an increase just in auto insurance of 19.5%, I would kind of expect this to be priced in and written in. So if we go year over year, that would put us back to this vertical line I'm going to draw on your screen right now, which is going back to July of last year. And lo and behold, we've seen the price of the Progressive company, PGR, over 100% gain in that 1 year window of time. So, okay, that makes sense. You're seeing a huge increase in the cost of your services, and they're passing that on to us, of course. Big Ed says, housing insurance sucks as of late as well. Yeah, I didn't see, let's see if that's on here. What's interesting on this list is it doesn't show housing insurance. It just shows auto insurance. So number 2 on this list was rent increasing 5.1% year over year, housing increasing 4.4%. You had household energy, restaurant meals right around 4.2% each. And then it slowly tapers down there. And it says overall inflation is at 3%. Okay, but what's pulling this number down? Why did we go from 3.3 down to 3.0? What was that piece? Well, you see here at the bottom, you had used vehicles year over year have dropped 10.1%. Of course, this is great news for anybody who's looking to buy a used vehicle. New vehicles, by the way, fell 0.09%. So as you guys know, if anybody here wants to grow their wealth over time, you want to increase your net worth, don't buy a new vehicle. We had this discussion with a viewer a while back that was talking about buying a vehicle, and everybody in the room was like, buy a used vehicle. Absolutely. Not only is it better for you, but you're starting to get a bigger separation between new and used. Used are falling even faster in price. Great, buy a used vehicle. Yeah, toys dropping 6%. I'm not very up on my toy consumption anymore, although I am a sucker for a good set of Legos, I will tell you that, and maybe some board games. But yeah, I'm not in the toy consumption piece. This one I found interesting. It says airfare year over year has dropped 5.1%. Now, John's one of our in the airline industry. I call BS on that one. There's no way. I've been flying last year and this year. It seems like now the prices are more expensive than they have been in the last 4 years for airplanes. And maybe that's timing of the year. But come on, there's no way airfares dropped 5.1%. When we see these numbers, we're supposed to expect them to be all nice and look good. Brought to us by Power Trading Radio. Wait, hold on, what are you talking about, Dave? There's no Power Trading Radio anymore. Power Trading Radio's gone, done, dissolved. I'm the host of that. I used to be the host of that one, so I know that one's done. John says, buy a used Ferrari. Maybe, right? Maybe a used Ferrari, but when you're looking at a Ferrari, you're dealing with something that has scarcity to it. So you have some rare aspect, and that may actually increase in value over time depending on the rarity of it. But if you're buying, a Huracan or some really popular mass-produced model by Ferrari or Lamborghini, not going to hold its value that much, especially if you're buying like the Lamborghini Urus, which if you look at the reviews and the people online, they're mocking that car for being one of the most crappily built cars ever made. It looks just horrible the way they're just ripping panels off. It's all old Ford products. Anyway, let's see. Oh, wow. Yeah, you know what? Thank you for bringing that up. That's very interesting. You got me. So Dave, notice this. So as you guys know, my computer crashed, and I've been going through old hard drives trying to find templates to use, and I guess I have used the old Power Trading Radio template. So I'm going to have to get that off screen so I don't get any copyright infringement once. Thanks, John. Thanks, Dave, for pointing that out. I honestly had no clue about that. I will fix that. That's funny. Tells you how quick I'm scrambling to get graphics and visuals ready for the show since my computer crashed. That's funny. Damn, Dave, you got me. All right, so if we look at these numbers, again, we talked so much about the insurance side of things and used vehicles. You could run the gamut here. It feels like there's a lot of stuff that's pulling this down and one big category that's pulling it up. So I think that's why you saw this slight drop today in the CPI numbers. Now, all grand scheme of things, what does this mean to you and I? Well, this discussion will be never ending until the discussion ends. I know it sounds weird, but if you look at what the Fed is doing, Jerome Powell has said they're data dependent, they're waiting, and they have made it very clear. Inflation, core PCE price index is the number that they're focusing on the most, right? So we got to think about what does that core PCE price index number look like? When is it going to be coming out? And how might that be impacted by this data? So today we saw that CPI number lower than expectations. the month over month actually showing deflationary pressure, which would be good for the markets. Tomorrow we get our producer price index, which typically will follow relatively close to the CPI numbers. But the real number comes out on the 26th, which is 2 weeks out. We've got 2 weeks out until we get to the 26th of July with that core PCE price index number. And that's, of course, all eyes will be watching that one. So to me, what this means is the Fed now has a little bit more justification to cut rates by the end of the year. We already talked about there potentially being one. The markets have already priced in 2 rate cuts. I think that may change here based off, we'll see what happens next week. But here's the FOMC Fed Watch so we can kind of see what those numbers look like. To look at the July 31st cuts, right now it's 91% we're going to stay the same. And I'm pretty sure that's going to stay the same way. Although you'll notice that it did increase a little bit the probability of a 25 basis point cut at the end of July. Now, this does not include, let me make sure here. Yeah, this does not include today's CPI report. So tomorrow, we'll see these updated and then shift. My guess is we're going to start to see this whole little dome here of rates for the remainder of the year start to shift further to the left. Right now, there is only a 0.4% chance we stay where we're at. We are looking at a 7.5% chance of a 25 basis point cut, 43.8% chance of 2 rate cuts by the end of the year, 44.4% that 3 rate cuts. So that's where we stand right now, is between between 2 and 3 rate cuts by the end of the year is what the markets are pricing in. If that PPI number comes out lower than expected, this whole thing will shift over to the left, and we'll probably see now 4 rate cut potential by the end of the year. But I still am sticking to 1. Again, I don't believe that there's any reason for them to cut rates. Why do you need to cut rates? We do not need to stimulate the economy. If we cut rates, housing prices are going to continue to go up because now you have more people buying homes, which is going to raise housing prices and rents because people are now wanting to get more money for their properties. If we cut rates, then we basically drop the value of the dollar a little bit, and that makes commodities more exciting, which means that some of these other pieces might go up as well, such as live cattle, lean hogs, pork, all those ones we looked at yesterday could start to move up because the dollar has been on such a phenomenal run right now. Let's go bring up that DXY for you guys so you can see that one. Dollar index has been doing great today, down 0.5%, coming right back down and tailing into this yellow box. This yellow box has certainly been a line in the sand for the past couple of months. And keep your eye on that one because if we break this to the downside, then I may be buying Big Eb a beer because it looks like that 10-year, which was down over 2% today, we stopped right at kind of that similar point. Let me just take this line down here. Actually, let me put a horizontal line. Hopefully it's dashed so it looks different. Perfect. You notice we kind of bounced off this line right around 4.18% on the 10-year yield today, but it was a pretty ugly down day. And if we see that dollar drop, this is going to drop as well and continue to push things down. Paladin mentioned we may never see rates as low as we had. I've been saying that for a while. If we look at let me see if I can bring this up for you. Let's see, 30-year mortgage rates. I want to see a chart of the 30-year mortgage rate charts just so we can see long-term what this looks like. Bear with me as I try to find one. Here we go. This is from the Fed, so trust the information, right? When I locked in a 30-year fixed rate mortgage, it was at 6%, which was right where my cursor is at. Let's go to where my cursor is at. 6% is right. Come on, right about there. Right where my cursor is at. And unfortunately, I can't draw a horizontal line on this one just because this is a web page and I can't do that. I could probably take a screenshot of it for you, but where that cursor is at is 6%. At the time I got that 6% loan, what do you think I was doing? Let's just face it. If I locked in my 30-year fixed rate mortgage, right, come on, I'm almost there. Right there. Would you guys feel that you did good or bad on locking in that rate? You'd probably be like, hell yeah, I'm buying at historic lows. I locked in my rate at historic lows, 6%. It was like, pat myself on the back. I bought at the bottom of the housing market. Awesome, right? And then it kept on falling. So if you think of 6% as being the norm for that 30-year fixed rate mortgage, I thought I did really well. Well, time went on. And as we got into 2016, rates kept dropping, and I refinanced at 287, and that was a historic low. Oh, Margaret, we always got to pick on him, huh? So Ricardo got 275. When I locked in, and by the way, mine's a 15-year 287. Right? Let's be clear, that's a big difference. I did a 15-year at 287, and I was like patting myself on the back. I'm like, wow, Merlin, you'll never see rates go this low. And you might recall we were having the discussion on this show, which was, are we going to go negative? Could we see the 30-year fixed rate mortgage go negative? And it is a possibility, albeit a very distant one. And we didn't get there, right? Obviously, we saw those rates turn around, they bottomed out, and now all of a sudden we're faced with this very sharp rise in rates. So, the big question is, will we ever see those rates again? I don't think so. I don't think we'll see rates down at 2% again. But even if we drop a little bit from where we're at, right? We're at 689. If you look historically and go all the way back to the left of where my cursor is, through the 70s, 80s, the 90s, they were all paying higher than 6.89%. So this is historically low on the grand scheme of things. I do agree with Powell that we probably won't see those 2% again, but I think we could get back down to the 5s, maybe the high 4s, but I think 5 is where it probably will bottom out at going forward. So for all of you that refinance, I know many of you did. John says, I did a 5 years, I did a refi 5 years in from that area. Nice. A lot of people refinance, and I think that was just smart. Future trader locked in 2.35 15-year, right? And at the time, Future, you had to be just going, are you kidding me? I could borrow that money at 2.37 and just go and buy, I guess you couldn't buy the 10-year at that time, but you could buy a long-term bond that was going to pay you more than 2%. You could have bought, depending on the time you bought them, but you could have just bought in the equity markets, right? Earn yourself an 8% rate of return historically over time and borrow that money at 2.3%. So I don't think we're going to get to those lows, historic lows of 2% again, but we could. Anything's possible. Yeah, right, Margaret? Congrats, future trader. You got to feel really good about that one. And what's funny is I've got a 15-year that I refied in 2016, so I've got just a few years left to pay off the house. I've been of the opinion, I want to pay it off. I don't like having debt, so I wanted to pay it off. I'm like, why? At 287? I could literally take all the money that I have saved and throw it in that I was going to pay down the mortgage with, pay it off with, and just buy a 10-year bond and have positive cash flow over what I would have used to pay off that 15-year mortgage. All right. John says, just in fact, that means housing prices versus income are way out of whack right now. Totally agree. Talk about this all the time with friends of mine. It's like, how are you going to buy a house today? If you're young, good luck on these Gen Zs trying to buy a home. I do feel bad for them. I feel very fortunate that I was around real estate as a kid. My dad taught me the importance of real estate, and that was a life lesson that I learned, luckily, through my father, who has always been involved in real estate. However, for those of you who are real estate agents, it's a double-edged sword. When times are good, real estate agents do very well. When times are lean, it can be rather rough because you're self-employed, so you don't have any 401ks or anything like that, your retirement accounts. You got to do it all self-employed, and if you don't take care of those types of things, not a lot there at the end. All right, let's see. Rates should never be lower than 5%, in my opinion. Well, I don't know. I wouldn't say never. I think that the justification for what the Fed did to push those rates as low as they did caused what we're experiencing right now. And while you might look at it and go, they should never be that low at 2%, what did it do? It saved the housing market. It caused this huge wave of buying. So any one of you that owns a home right now, you can curse Jerome Powell and the Fed all you want, but realistically, you should be praising them. Have a little altar at home because they have now pushed the value of your homes up by creating all this buying frenzy. Not to mention stimulating the economic market so your 401k accounts and your IRAs are probably the highest that they've ever been in the history of your life. So, I'm all for abolishing the Fed, but deep down you got to look at it and go, thanks, guys. You're making me rich right now. Martin says, real estate should be demonetized. Buy Bitcoin and hold your purchasing power. Buy real estate to live in. Yeah, well, I think that, when you look at the pillar of net worth your home needs to be on there. You need to have a home that you're investing in and growing equity in over time. I know that it's a big debate here. Some people think that you should never buy a home. You should just rent. I disagree with that. I think you should own a home. Makes you feel better about where you live. You personalize it. You make it your own. You make it custom to you, but you're also building equity in that, hopefully, depending on where you buy and the times you buy. So, okay, let me go down to the list here because I have other questions I want to make sure I get to. We have another sip. So, cheers, everybody. Happy early Friday for me. I don't have the gentleman's name on here. This was actually posted on... I think that this was from yesterday's YouTube show, so I apologize if I don't have your name on the screen. Again, I'm going through a transitional phase right now of content, and the question was, what do you think about FXI? FXI is an ETF that represents China, and I guess, so the question you'd be asking me is, what's my thought on the market over in China? Well, first off, let's go take a look at the Hang Seng futures just to get an idea of what's going on over in China, because we really don't look... at the Asian markets too much. I generally don't go out and look at the Hang Seng, again, because I just have a distrust of the data that's coming out from China, but to be honest, I just trust the data coming out of the United States as well. So to the question from the viewer, again, I apologize, I don't have your name here. Looking at this chart, what would you say? What would you guys say about this chart? Would you be bullish or bearish on this chart? This is the Hang Seng, so this is representing your major caps in China. I'll put on a weekly time frame just so we can see the real big picture. Grand scheme of things looks great going all the way back into the 1980s, but let's be realistic. This is what we're most interested in, right? It's been making lower lows and lower highs for the past 6 years. However, what we're noticing right now, or at least I'm noticing right now, is it feels like it hasn't bottomed out again. So you've got this kind of double bottom right here. So the market feels like it may have stabilized. You have this nice rally here. Overall, I'm with the group here. Margaret, Ricardo, Big Eb, John, and Steve are all going bearish, 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 bearish. Yes, I am bearish, but it may be that turning point. And what's causing me to think that it might be the turning point is pretty simple. It's the fact that that trend has been down for so long, but it's really this part right here. It's the fact that we didn't make a new low in January. Now all of a sudden, you have this nice bounce. The bounce did not break a pivot high. So it's got to break that high for me to be interested in it. However, now that it's sold off, I'm going to put that new kind of pivot high right around this, call it 19,850. So if we can get that above there, I might be bullish on FXI. All right. And again, it assumes I trust the numbers coming out of China, which I do not. But again, if I'm trading the price charts, then I'm looking at going long above 19,834 or 8,850. If we look at FXI, it's going to be a very similar picture. You notice we have a very similar picture. And I could go here, maybe raise it up just slightly higher and say if we get above 3058, call it 3060 on the FXI ETF, then I might be interested in going long. So at this point, I'm not bullish on it. I'm more on the bearish side, but it's starting to show some positive pieces, some slightly positive up move parts. Now, what else could we do? Well, if you really wanted it, you could be selling those puts out there at $24. It's currently trading at $26.94. You could sell those, let's say, $25 strikes and collect some premium if you were bullish long term. I don't know what your objective is. If it's whole numbers, I'm not sure how they price this one. I would maybe go $24 on this bad boy because it's right in that area of consolidation and in the breakout. So there you go. Need a higher high to go with the higher low to confirm that trend. Yep, exactly, John. And that's kind of what I'm saying. Is like if it gets above here, then I'm not saying it's over, but it certainly increases the probability that this thing is going to move to the upside and have a bigger run. So the graphic here, what I think of China, I'm not that bullish on it. I think that there is Steve brings up an interesting point. He said, I've read that Chinese real estate is in real trouble. Yes, we've been hearing that for a long time. Remember, it was Evergrande, had all these defaults going on, and you hear about these ghost cities, et cetera, et cetera, et cetera. I just don't know enough about the Chinese market to feel comfortable, making a bold claim like, oh, I'm all in on China. There's too many variables, not only the unknown and secrecy from the governments, the manipulated data, but I'm not in tune with the housing market over there. I'm definitely much more in tune with the housing market here in the United States, and I'm still no expert here in the U.S., but I'd be a neophyte if I was trying to claim knowledge of the Chinese real estate markets. And what I'm stuck with is reading, reading up on what people say, what analysts say. If you listen to somebody like Jim Rogers, who is one of my favorites, so one of my favorite guests I've interviewed, he's really bullish on emerging markets. So not so much China. He's more about, Brazil, Vietnam, I think was one of his big ones. Singapore, he's talking about as being big. Great. But FXI, just from a pure technical perspective, I would have to wait for it to get above that $30.58 mark. That's that line in the sand where all of a sudden I'd be comfortable. Very similar to what we talked about with Siri for Michael the other day. MCHI, let's go MCHI. Yes, this is going to be a very similar one. This is the iShares version of that. As the picture is pretty much the same. We could draw this in 2 points, right? It's slightly different. So you could use this high right here on MCHI. That would be right around, call it $50. And there's also that pivot that we established just a week and a half ago, right around $47.70. Right? So those two would be the points where I'd be interested in potentially buying in, but not yet. That downtrend is not over yet. I do feel comfortable with it for consolidation purposes. Feels like it's just traversing sideways. But from the stuff I've read, and again, I don't know how true it is, China's got problems. China's got big problems over there. So, and again, I don't know because I'm not in the country experiencing what's going on with the housing and the government and all that. I just hear it's hearsay for me. Let's see. What am I going to say? What are you saying? What about Yum, which is the KFC of China? Well, it's not the KFC of China. Let's go. You've got Yum. Okay. Okay, so yeah, sorry. Yum Brands has their own ticker symbol, and then this is the Chinese version of it. Looks atrocious. This looks really bad. I mean, we were up at $65 just a couple months ago in April, and now here we are at 31. Let's go look at Yum Brands overall. All right, so Yum Brands is actually holding, but Yum Brands, the China holding, is not doing so well. So if anything, I'd be looking to buy Yum Brands, YUM, which has got a nice series of higher highs, higher lows. You can see the uptrend here in place. Actually looks like you're coming right into a buy point on Yum Brands as of today, or on this weekly time frame. You've got a weekly into demand after a pullback, and it connects to this uptrend. Yum Brand actually looks pretty good. Not the Chinese version. Here's Yum C. This looks bad. I wouldn't touch this one at all right now. Again, going back to the discussion I just had with FXI, why was I interested in FXI? Because the sell-off has stalled and slowed down, and now it's starting to curl. If you use this one, there is no curl yet. There's no breaking of a recent high, so this thing is still in a downtrend. I would leave it alone. Dave says, I use the double top. You talking on Yum? You've got a big double top on Yum, although I would argue that this is not just a double top. I would say this is more of an ascending triangle. My love for ascending triangles. I'm going to draw this here just so we can get that piece out of the way. And again, this is about torturing the chart to get it to say what you want. We could also modify this one now that it's a completely different trend. Yeah. Well, it's the gist of it, would you? There you go. Michael, you crack me up. You're like, Yum C can go to 35. Yeah, Yum C can go to $1 million. Who cares? It's not. It's not going that direction, right? It could bounce to 35, 36, 38. I mean, this thing could go up back to $64, but in order for it to get to $35 or anything higher than 31, it has to go up. And it has not been able to do that. 35 is actually a pretty easy target. If you're looking at this from a pullback perspective, you've got all these nice downtrends in place, since 2023. Yeah, if it does bounce, I would say 36 is pretty much your high point for a bounce right here. And then it'll probably keep on trending down. But yeah, I would not go long on this one for a while. I think if you're going to do anything, Michael, you want to join the downtrend on this, not try to pick a bottom. Picking a bottom on this one is pretty bad. Liz says, be aware of the tariffs they can impose on China. Again, just saying, it happened before. Yep. And this is another piece we talk about, with this election is who's going to be president. And with the market currently, we know what Biden's stance is. We know how he's working with China. So that will be predictable if Biden wins the re-election. If Trump comes in, that all of a sudden creates an uncertainty out there, and markets will go haywire. My guess is that it'll probably initially not be so good for Chinese stocks, but you just never know because Trump could flip and say one thing positive, and all of a sudden the market just rallies like crazy. My bet would be on $10. You're talking about YUMC? I don't know if that's pretty low, but you know, now I don't know if YUMC would be at $10. I think we're talking about different symbols here. All right, what else do I have? A little bit. Today's not the day for bulls. Tomorrow is a new day. Cheers. It's not too late. No, it's not. Let me run through this top part here. Since I just talked about China, we'll talk about kind of what caused this action in the market today, this really abrupt sell-off for the tech side of things in particular. So there have been a slew of articles recently talking about, not sure who's going to be president tomorrow. Yeah. Good one, John. Good one. A whole slew of articles talking about how NVIDIA is way overpriced and it's way overextended. And there certainly is a lot of people that believe that. I think it's slightly overextended. I think it'll have a pullback and then continue on just because the prospects of what they're delivering to the market is unlike anything we've seen. So we have that nice correction today in NVIDIA to start things. So let's look at NVDA. And I'll go back to a daily time frame here so we can kind of see a little more clearly what's been going on in the short term, right? And I had mentioned on yesterday's show that for those of you who are looking to buy NVIDIA, I think Michael, you had asked that as well. I said, well, where do you buy NVIDIA? I said, well, you could go out there and maybe sell the 120s. In this case, the low point of the last couple of months is 118. So maybe you can sell those 118 puts, collect some premium. If it doesn't get there, okay, you collected your premium. But if it does get there, you bought it at a discount. And I think that hopefully, personally, I'm hoping that not just for tomorrow, but on Monday, we continue to get a slide here because I wouldn't mind buying NVIDIA at lower prices from here. But we'll see. This is part of the reason we saw the big drop today. You had 5.57% slide in NVIDIA today. And again, down almost another 1% in the after-hour session. But really the story was this one. We talked about Tesla and its just monumental surge over the past couple of weeks, which of course has left me in the dark because I got out of my shares at 165. I haven't talked to Don Fron, who's probably buying himself a new Bentley today because he's been all in on Tesla and he's got to be just loving this. But what was it, right? What was the factor here with Tesla? Well, we're going to put a license plate on this bad boy, and that license plate says delayed. So essentially, this whole shock and awe that happened is Tesla was supposed to roll out their whole robo-taxi plan and make it very clear to everybody what the robo-taxi situation was going to look like in August. So July, that's next month, right? That would be fantastic if it did happen. I mean, I want to know. I would love to know all the details because if I can plug my Tesla into that grid and get paid, I'm probably going to go out and buy a Tesla. I hate to say it, but even though I love my Toyota, if my car can earn money for me and pay the cost of the vehicle, go ahead. Take my car and go ahead and do it. So, what happened? Well, Tesla was supposed to do that in August. They have delayed that now to October, giving their developers an extra 2 months. And the markets were like, what? You don't know what you're doing yet? And the markets freaked out. That's why we saw this big sell-off in Tesla. This is not the inflation numbers that caused it. Someone asked me or told me that this is inflation-driven. No. How do I know this really isn't inflation-driven? Because an announcement came out during the day, and you could see that Tesla was not impacted really by the CPI numbers. It rallied up like the markets did, and then all of a sudden came crashing back down. This is basically Tesla's own news talking about how they're going to delay that presentation of Robotaxi to October. Hey, fine. I'm cool with October as well, but this caused a pretty sharp slide in Tesla. Unfortunately, it's still a long ways away from me wanting to buy Tesla at this price level. Maybe this slide continues for a little bit. I honestly, I don't know where the level is because we got so many runaway gaps here that I just don't know where. I'd love to buy it at 180. If I could get Tesla at 180, I would load the boat at 180, and I will probably look to sell some puts if we get lower. But right now, the premium's just not there, unfortunately. Toby says, I was able to cash out of my short calls on Tesla. Nice. Good for you, Toby. Big Ev says, Elon's been talking about robotaxi in 2018, right? And it's funny, he's like a David Copperfield. David Copperfield or any magician will be performing a trick, but they're really using everything around them to create the magic. And if there's bad numbers, Elon's very good at deflecting and saying, oh, well, yeah, robotaxi. Oh, don't look here, look over here. This is where the magic's happening. And robotaxi has definitely been that piece, but at a certain point, you're going to get more and more called out on that delay. And, I, for one, really want to see what the robotaxi is, what the program looks like, how it works. But that's one of the main reasons we saw the big drop today. But if we look at our Magnificent 7, Tesla down 8.4% today. Nvidia down 5.57% today. Meta was down 4%. Google was down 2.7%. Microsoft 2.4%. Amazon 2.3%. And lowly little Apple 2.3% slide. Although Apple looking the best out of all of them. I mean, just barely. Ever since Apple made the announcement that they're going to be incorporating a ton of AI into the new application, their stock has just gone. Really, has it had a down day? It's like 2 down days since they made that announcement, and it's just been ripping ever since. So 2 or 3 down days. So how does this all play out for the broader markets, right? How do we look overall? Let me scroll up here so I can get out of this one. So NASDAQ was your worst performer, as we just talked about. Overall, NASDAQ futures down 2.19% on the day, which is a pretty rough day. Keep in mind, there is this unfilled gap that goes all the way back to January 12th. And, sorry, not January 12th, excuse me, June 12th. Learn to spell, Merlin. J-U-N is not J-A-N. June 12th, we had that gap up into the 13th. And that may be a target for this one at 19,496. Although, for me personally, I think it's 19,900 is your stopping point for this. I think we'll pull right back into this area consolidation, which led to the last recent move. That's where I would be targeting this NASDAQ to pull back to. Big Eb's loving this one because that 10-year had a pretty sharp slide today too. Down, it was down over 2%, almost 3% at one point. Yeah, we are getting closer and closer. We might see this continue to drift lower and lower. I still don't believe it just because of all the macroeconomic pieces and what the Fed's doing with unwinding the balance sheets, removing money supply. This should be driving the dollar up and yield should be going up as well. But no, as they say, the markets will always amaze you. When you think it does one thing, it'll do the other. So we're at right now 4.21% on that 10-year yield government bond issuance, and it's been trending lower ever since mid-April of this year. S&P 500 was down pretty handily, 0.85%. It was an ugly day, but what did it do? It almost gave back yesterday's gains. So while it looked like a horrible day, you're still up on the week, still looking good for the week. Now, we do have this shooting star that's on those S&P futures. I personally think that's still in play. That was a question from John, which I did not add to my slides. What does that mean? It means that if we get a break down below 5,626, that there's momentum to the downside there. Even though we have this big move up, that shooting star for me is still in play. Again, as Margaret would say, or I think Margaret or Lisa was saying, you need to tailor how you use these candlesticks to your own personal style. I'm still looking at that as in play. And I think potentially for more downside movement if we can get below 5,626. And today was a pretty big shock to the system. Again, the PPI number will be interesting tomorrow and see if that changes the mood of the market. Dollar index down 0.49%. Again, right into that yellow box we've had mapped out for months now. It's like the 6th time it's hit it. Long bottoming tail on it and just ripped straight out of it. Oh, it's a beautiful tap. Bitcoin, really doing nothing. I don't expect much from Bitcoin other than slowly drifting lower again because of Mt. Gox, and my story is not going to change there. Crude oil was up 0.63%. This helps me. I am currently, I sold those puts on XLE. I am of the opinion that crude oil is going to rise and energy will get greater profits, and we saw a nice move up today of 0.63% for crude oil. XLE, by the way, had a nicer day, 1.04%. Again, I sold the $88 puts, which are right here, collected a nice premium, and my guess is I'll probably get those to expire worthless, but I'd like to own XLE anyway. Next on my list, I'm almost at the top. We're so close. Commodities did nice today. Look at this gold chart today. Boom, ripped to the upside, although still within that yellow box. So Tom, I'm pretty sure you're probably doing spread trades on GLD because this has been just such a nice sideways action here. Well, we ripped up today getting near that high side of that yellow box, which I can't tell you the price on because these these numbers over here hide it from me. Let's see, that number is 2,454 would be the peak there, and we're currently at 2,421. So another $30 away from getting the top of that channel on gold, and also silver having a nice day up 1.85%, coming back towards its highs that we saw from back last May. Now, the real story was that rotation, which Big Eb mentioned earlier, people flocking out of tech and really pouring into the Russell 2000 today. This was just such an about face, right? Almost all the indexes were down today. Well, Dow was up ever so slightly. NASDAQ down big because of the tech sell-off. That brought down the S&P 0.85%. And the Russell 3.69% move to the upside today. Not only did it break out of that shorter term range, which I was kind of surprised on that, but it came smack into that overhead high we have mapped out at 2,150 for the Russell. The high today for the Russell, 2,149. So literally 1 point away from that line that I've got drawn there. There are some topping tails that go back to April 1st. That high would be 2,167. If we get above that, then all of a sudden you're looking at a pretty big jump on the Russell up to probably 2278. And then ultimately you got your all-time highs that go all the way back into November, which would be definitely a much longer distance away. All right. What other questions? Let me see how we are on time here. I want to make sure I get to these 2 questions. Yep. Okay. I got the questions answered. Let me run through it here. So you know what a pinch chart is because Yum is oversold. There is why I call. Oh, I don't know if I would call that a pinch chart. If you're talking the squeeze action on it as well, I mean, it's just you trade very different than how I trade, Michael, and that's totally fine. Everybody can have their own way of trading, but to me, those charts look like garbage. Just the same as Siri did. All right, let's see. Video puts her up 120% today. Woo! Not enough to fully hedge my position, though. But you got most of it covered, Big Eb. Got most of it covered. At least you had the hedge, right? I think some people are out there without any hedges, and that was the time because we talked about the black swan. How do you prepare for a black swan? I think I talked about that on Monday's show. Did we do a show on Monday? Yeah, I didn't do a show on Tuesday because of the vet. We talked about that on Monday's show. If you're ever nervous about it, just buy deep out of the money. It's the beta weighting your portfolio and making sure you get your position covered. That's the tough part. Toby says, able to cash out of my short call. Okay, got that one. I'm short. Okay, sold the calls 280 on Tesla. Not a bad time. You sold the 280s? You're like, just sell off Tesla. Sell off so I can buy it lower. Although you got your covered call position, so you're worried about your underlying going down as well. Andrea says, with the Japan intervention, I wouldn't be surprised if they cashed out on tech holdings to buy all the yen they could to intervene. Not a bad thought. Let's go look at the Japanese yen here. I think there is going to be a lot of big money moving around, particularly with intervention in that Japanese yen. Right, you have this big drop out there today in the USD JPY. I could bring up the Japanese yen futures. Again, the more that Japan does to manipulate their currency, which they're going to have to do. We talked about this, and we talked about the imminent intervention, which we kind of felt that was going to come, would create these big moves. And you got, a monster move today. This is a pretty significant move. Basically, that sell-off on the USD against the Japanese yen today erased the last 2-3 weeks worth of trading, and that may continue on. But remember, my belief when we talked about the intervention coming was that what you'll see is probably a sharp decline, and then this trend will continue because they would have to do an incredibly heavy hand, which no central bank wants to do. The Japanese are going to do a small amount of intervention here, which they're doing, right? And then the U.S. dollar is probably going to continue on up. And then they'll do another round. And at some point, it will break this trend. But I still think you're going to see it continue to move on up from here. Of course, that 161 mark is going to be your big line in the sand for that one. PBJ, I have vitiligo. It's a skin disorder. So I have lack of pigment in my fingertips and on my knuckles and on my face. So yes, it's a skin disease called vitiligo. I think last week was actually National Vitiligo Day. I'm fortunate because it's not bad on my face, but yeah, my hands are pretty, you see the hands are pretty, that's why I try to stay out of the sun. Stay out of the sun. There you go, PB. Thanks for pointing out my medical condition. I appreciate that. No, it's okay. It's fine. Don't worry. Let's see. Listen, tomorrow bank kicks off earnings. Yes, as well as PPI. So we'll have to wait and see whether the markets retrace further. Yeah, and this is why I didn't make a big move today. I didn't want to put a bunch in short. I kind of felt that we were going to have a little bit of a sell-off. We did have a sell-off, which was great, particularly after that CPI number. But I just don't have the intestinal fortitude, because I'm going to be traveling tomorrow as well, to go and stay with a big short position in this market. You've got JP Morgan. May as well start that. Let's just kind of go down that route because it's 46 after. Let's go and bring up your earnings calendar for tomorrow because you have some major names. This is really the exciting part, is watching this earnings kickoff. So here's your earnings calendar. Let me bring up tomorrow. You have JP Morgan, Citigroup, Wells Fargo, Bank of New York, Mellon. Those are just your major financial firms. So, this is, to me, is the kickoff. It used to be Alcoa, but now it's just the banks are really what does it. I'm so interested to see what happens with JP Morgan Chase's earnings and Citigroup for tomorrow. We'll look at those charts here real quick. So let's start with Citigroup. I mean, Citigroup has been phenomenal since last October. That is just a beautiful chart. JP Morgan, an even better looking chart. You guys might remember, I think some of you were actually laughing at me, and not laughing, but like rolling your eyes like, whoa, Merlin, you're talking about buying JP Morgan? Oh, God. Well, I said, here's the 3 stocks I'm buying right now with Schwab, Bank of America, and JP Morgan. Well, JP Morgan's chart has been phenomenal. Of course, I'm out. I just sold the puts on those ones, so I collected a lot of premium. It never got exercised. If you look at Bank of America, also beautiful chart. And then the last one, WFC, is what's going to report on Friday. All these financials look really good. All of them just showing massive gains financially. And of course, I think that has to do with just big business and money. Lots of money, lots of loans, rates going up a little bit. You can actually charge more money for the loans and make more. But that sure, thanks for the shirt. It's one of my Vietnam specials. No, VBJ, don't worry about it. I'm just giving you a hard time. No big deal. Let's see. Today is National Convenience Store Day. So today's date tells me, wow. Today is National Convenience Store Day, huh? Well, I usually do, my trivia rounds are usually based off of some special day. So unfortunately, I'm not doing trivia tonight, unfortunately. All right, let's go. And so that was your earnings calendar. We do have, of course, you all know this because we talked about it at length today, which is going to be Friday's session of economic announcements, which is building permits that's Canada. Core PPI numbers tomorrow. So PPI and core PPI, as well as the University of Michigan Consumer Sentiment. But let's be honest, no one really cares about the University of Michigan Consumer Sentiment report anymore. It's funny, when I first started in trading, I was told by one of my trading friends that this is such a critical report. I don't think so. I really don't think it's consumer sentiment. My measure of consumer sentiment is go to the mall. Go to a place where there's a lot of retailer businesses and just see what the mall is like. So one of the malls by me is called South Coast Plaza. It's packed. Absolutely packed. I mean, parking is an absolute nightmare there. It's totally packed. So to me, to say consumer sentiment right now on a scale of 0 to 100 is only 65, I say hogwash. And I guess this really depends on where you live, right? I think some of you are going to experience different numbers. I would say here in Southern California, I'd put this up to the 80, 85 mark because it is really ripping right now and people are very, very positive from a consumer sentiment perspective. Now, PPI, look what we had here. Let's do just a month over month because they don't quote the year over the year. I don't know why. We saw the month over month decline. It went to negative 0.1 and we were already at negative 0.2 on PPI number. Now, they're expecting the PPI to rise to 0.1. At this point, hell if I know what's going to happen. But if history is any indicator, last time the PPI came out way better than CPI. So if CPI showed a contraction of negative 0.1, man, this could come out at negative 0.2, negative 0.3, the way that data has been rolling out. So this is your biggest piece for tomorrow. Again, you have inflationary data plus all those big, big earnings. It's a pretty important one to keep an eye out for, all of you, so be careful out there. Dave says, today is my birthday and I've never been to 7-Eleven to get a Slurpee. It's time. By the way, Dave, it's too late to do it now, but for all of you, I would recommend you do this. Here's your, and happy birthday, by the way, Dave. We had Big Eb the other day. Yesterday was Big Eb's. Yesterday or Monday. See, I'm already losing track of time. I think it was Monday. All of you should do this. Everybody here should have a fake junk email. So go to Gmail and just create a junk email, right? Just say, Dave's junk email 175 or whatever. Who cares what the email is? And use that for everything you sign up for. Everything. Unless it's something you really want. So what you can do is you can go onto Google and type in restaurants that give you free birthday gifts. So you can go to California Pizza Kitchen. You can go Denny's, all these ones. But it used to be you could just walk in. Now you have to register through their site. So I have a Google Calendar that alerts me, I have an email set up. My junk mail one, and I have a folder that sends all these restaurants to it. So when your birthday comes around, you can literally just open up and go, oh, yep, I got my meal here and here. So here's my breakfast, here's my lunch, here's my dinner, here's a free coffee. And the whole day should be free for you by just using that. But you have to sign up early. You can't do it today because today's your birthday. It won't be there in time. But for anybody who's got a birthday coming up, I would recommend doing that. You can get a ton of free stuff. Free drinks, free pizzas. It's free. It's your birthday, right? You should be getting all kinds of stuff for free. All right, what's John say? If local privately owned bar restaurants are not hiring live music when they usually do, that is an indication. John, I think it also has to do with where you live. So like I live in Orange County, which in all my travels around the world is one of the worst counties for live music. Like there's just no appreciation here for live music. Everyone goes to Los Angeles or maybe San Diego, but there's like one decent music venue here. Everybody else is just cover bands. So yeah, I guess it really depends on the place, but certainly shopping is your main indicator. Malls are a great way for that. All right, I got to wrap up. It's the end of the show. Denny's has an app. Yep. Denny's has an app, but you still have to sign up and give them your birthday and all that information. Let's see. Also use a fake birthday. You don't want to advertise your real one. I don't mind advertising my real one. What's to stop you registering at multiple sites with different birthdays throughout the year? Not that I would do that. Nothing really. They don't ask you for your driver's license photo or anything like that. So it's the honor system. So yeah, if you find a place that's like really good, that offers a really good special, sure, you could sign up multiple times. For example, don't tell Larry Jacobson this, but I actually like Benihana. I love the experience of Benihana. It's way overpriced. Way overpriced. However, if you sign up for I think it's called their King's Club or something club, when you sign up at Benihana on their website, you get a voucher for your birthday month. It's a 30-day window where your meal is free, up to $30. So you get $30 meal for free, but you have to go with someone else. So that's the catch. So you go with some friends or something. At least you get one meal for free. Hey, it's $30. Okay, so good. All right, guys, that's going to do it for me. I got to wrap up. We're going to the beach. As if you thought I didn't get enough sun because of my white fingers and I'm getting really tan lately. And by the time I come back from Vegas, guys, I'm going to look really, really dark. I actually thought about wearing gloves around because I just don't like when my hands get so pronounced that you notice it, which you guys did today. The choo-choo at Benihana, love it. I love Benihana. It's a fun time. The volcano as well, right? The flaming volcano. Rob Z says, use different birthdays so you don't get a glut. There you go. Just spread them out. And then you got to remember, you need to set up a calendar for that one. By the way, guys, I have just so you know, kind of the weird workings of me, I have a Google Calendar that has all my credit card expirations. So, we talk about reminding yourself when to rotate these credit cards. I could do that same thing with a birthday calendar if I wanted to and doing different days. All right. No, they don't, John, they don't throw the shrimp anymore because too many people are getting their shirt stained and then the restaurant would have to replace it. So they don't do that anymore. Nope, no flying shrimp, unfortunately. That was the fun one. All right, guys, I'm going to be in Vegas tomorrow, so no show for me. I hope you have a great Friday. I hope it's exciting. You're going to have that PPI number coming out. You've got the pomp and circumstance of earnings season kickoff tomorrow. It should be really exciting. I wish I had my popcorn trade of the day graphic, which I don't. That should be the popcorn trade of the day one. So unfortunately, no popcorn. But that will be an exciting one. And maybe when you come back, I'll have some chart of the weeks to talk about. This is a graphic I haven't used very much. I've got a bunch of graphics that my friend Tim created for me. Well, I bought them from him, but I never use those, like the market update. I thought this might be kind of fun to do a market update. What else do I have on here as far as... Oh, yeah. I don't do enough of these. The donkey of the day. I got to get the donkey of the day back and going. Anyway, thank you guys so much. Hope you enjoyed today's show. Always appreciate having you here. Happy birthday. I hope you do something fun tonight, Dave, for your birthday. And for the rest of you, party like it's your birthday this weekend. I will see you on Monday, hopefully not burnt to a crisp. So have a great weekend, and I will see you on Monday. Take care, everybody.